I think it's a very interesting chart because it's not restricted towards our markets. This is something to do with the Russell 2000, which is the small cap index, most famous small cap index for the US markets. Why I'm pointing out this particular chart is because it's come at a very crucial juncture for itself, something which has been seen only 3 times previously in the last 20 years of the history for the Russell 2000 index. So on the top grid, what you can see is the Russell 2000 index price chart. On the lower grid is the momentum indicators. Now what's so special about this chart are these crucial points. So what I've marked is the indicator, the oversold territory of indicators, which means that's the point where there is an extreme amount of pessimism on the markets as well as on the price fronts. Now what happens over here is that whenever the index or the indicator enters into the oversold category over here, you look at the resultant effect on the monthly charts for the Russell 2000. It forms a mega bottom on the longer term time scale. This was in the year 1990-1991, where the indicator had come back into an oversold territory. Look at the price impact, and over the series of the next 10 to 12 months, there was a phenomenal uptrend which started off on the Russell 2000. Same was the case in 2003. So the bear market, which started off from the dot-com bubble 2000, the indicators bottomed out in the start of 2002 and mid of 2002. And from there, you saw the Russell 2000 taking a process of 4 to 5 months to bottom out. And then from there was a significant amount of rally. And similar was the case in 2008, 2009 as well. Why this is important? Because now where we are in 2022, the indicator has entered into a very similar kind of a territory. These are exceptional cases where the indicators come into oversold territories, and looking at the historical aspect, this holds a lot of significance. We could probably be in a zone where over the next 3 to 5 months, even the US markets and the small cap index over there seems to be bottoming out.
So I'm tempted to ask you a question, Kunal. I'm going to walk up to the screen. 1990, the Russell index bottoms out. 2000, this is after 9/11.
Correct.
This is after the great financial crisis.
2008, yes.
What about 2013? Because that's the time the real bull market also started. What happened there? Because this sell-off, Kunal, is more like a macro sell-off.
Correct.
And the macro sell-off, the immediate parallel I can draw of is actually 2013. It is not 2008, it is not COVID. So what happens then?
So even in 2000, so this is 2013 and this is 2015-16. These are the 2 points. The only point was that these indicators did not come into the oversold territory.
So you're making a case that a new bull market in mid and small cap stocks is about to start.
On the US index.
Give me a high five for that. So what happens to India because of that?
So I think this will have a resultant very positive effect on our markets. And what this also brings into case is that the commodity sell-off which we have seen on the global markets right now, it may not be a short-lived trend. This could be a big trend in the making, and you may probably see the commodity prices ebbing off, and that helps the equities indirectly.
So the small and the mid cap stocks now, the second half of this trade of this year should be in a bull run.
Absolutely.
Logically speaking.
Logically speaking.
Can I hold it against you?
Yes.
It's a great analysis actually. That's why we say that history does not repeat itself, but it rhymes. And this is like the dada of all the index.
Exactly. And you have to look at it on longer term time scales. You can't look at it on every year time scales. And if it happens 3 times in the last 20 years, something to watch out for.
I'll get back to Nantha while we continue to high five. It may actually happen, Nantha. You don't know. That's how market bottoms are made.